Righty. Good afternoon. Hey, Jeffrey, how are you doing? If you can hear me okay, let me know, put it into the chat. Hey, Vidal. Hey, Tissot. How you doing? Hey, Jamal. Fantastic. You can see my screen all right as well, and just give it a couple of minutes before we get started. Hey, Stefan. Thank you all for jumping in nice and early. We'll get started shortly. We're going through the live trading session today. So just to share with you, my thoughts, my views of the markets. We do have some possibly big news happening, not so much today, but into tomorrow. So watch out for that. Hey guys, so as you're coming in, as we give it 2 more minutes, let me know, where are you joining me from? All right, I'd love to know where you're joining me from. And if you have, any questions, any things trading related that you'd like to find out, feel free, put it in. I'll be happy to help you along with those questions. And, if I have the answer for it, I'll help you with that. Manchester from England, Netherlands, Nigeria, fantastic. I see a hand up there as well. If you put your hands up, you can type it into the chat and let me know. Give me the question. Wow, we've really got everyone from around the world. Super. Alrighty, 1 more minute and we shall get started. I do see a couple of you familiar names, so thank you for tuning in again. I hope you are enjoying the sessions. Okay. How's your trading been, guys? Been trading well? Making money? Or, market has been a little bit choppy over the last couple of days. I hope you've been trading well. All right. Should we get started? Let's go. Let's get started. Newbie. Well, everyone starts as a newbie. Everyone starts as a newbie. It's all about time in the market, experience watching the charts, reading the news. Sooner than later, you will become experienced and you start enjoying this journey through the markets. All right. Okay, let's get started. So welcome again, everyone. Today we are with IronFX doing a webinar series on the live trading session. So what I'll be doing is I will be looking at some news, right, potential news coming up, what could impact the prices, where I think prices could be heading based on the way I trade. Then I'll be looking at the charts to identify key levels and possible key levels, possible trade ideas, possible trade setups based on the way I look at the market. So I'll tell you a bit about myself shortly. Before that, what I'll do is we have to get through the quick risk disclaimer there. So remember that any information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only, right? So I'll be sharing with you my thoughts, my views. Use it as educational material, learn from it. If you have any questions, please feel free to ask into the chat. I'll be happy to answer your questions as it comes along. All right. And most importantly is that as I share with you how I interpret the markets and I identify possible levels, if you're jumping into a trade, make sure you do your own due diligence. Make sure you check the leverage, check your margins, don't over trade, don't over leverage. Make sure you do your analysis before you jump into a trade, right? My view is that I've been coaching. I've been teaching people how to trade. I've been coaching retail traders, possibly like yourselves, for a long time now. And what I find is that there is no one strategy that fits everyone, All right, there's no one strategy that fits everyone. It's about how you like to trade based on your capital amount, based on your risk appetite, based on your amount of time available to spend in front of the screen, or not watching the screens. So it's all going to be tweaked. You should tweak everything a little bit to fit how you would like it. Okay, so I'll share with you the way I look at it, tweak, accept, learn part of it or learn most of it, and then use it based on your own trading characteristics. Just to share with you a little bit about myself, my name is Jin Dao, right? Everyone calls me Jin, so you can feel free to call me Jin as well. I'm one of the prop traders and market analysts here at the Everest Fortune Group. I'll tell you that I have been trading since 2008, right? I always say it's been 10 years, but it's been more than 10 years now that I've been trading. I have managed a fund professionally as well, and I'll be sharing with you how I look at the markets. I do it a little bit differently compared to most retail traders or most traders out there. I do look at the charts, but I actually focus on the fundamentals. I look at the news, I look at the data being released, I look at the comments from central banks. Then I plan my trade based on the fundamentals, based on the economics. Then I look into the charts to tell me whether it's a good time to get into the trade or not, right? So for example, if I'm looking at the news and I'm thinking that price should go up, and then I look into the chart, but price is going down, I'll sit out, I'll wait for it to turn before I get into a trade, right? If I expect price to go up based on the data and price is going up, then I'll get into a trade almost immediately because the analysis fits what I see on the charts. That's all the signal I need to get in. Okay, so that's how I approach my trades, my analysis over the markets, fundamentals, and technicals as a combination. I do use price action, I do use indicators and levels as well, just to tell me or give me a point of relevance to where everything is in the markets. Okay, so let me know as well if you can into the chat, how do you trade? I'll be happy to see the way you approach the markets, and if there's any points or tips and pointers that I can share with you, I'll be more than happy to do that as well. All right, so again, thank you all for attending this session. I will be now looking into the news, into the possible trade setups that we could have coming up. All right, and remember, disclaimer still applies. Do your own due diligence before you jump into any trades. All right, so with that and the way I trade, the first thing I do every time before I start looking into the fantastic charts here is I jump onto Forex Factory to check out the news. Right, I jump onto Forex Factory to check out the news to see what could be happening, what's likely to move prices. We did have a whole bunch of news today. Right? A whole bunch of news today. Predominantly was the PMI number. PMI is the purchasing, which is the P, manager, which is the M, index, which is the I, right? PMI is the purchasing managers index. What it tells you is the behavior, or it gives you a bit of a leading indicator into the sector. Okay, so a manufacturing PMI tells you whether the manufacturing sector in Spain is doing well or not. Manufacturing PMI or services PMI is tomorrow, I think. So manufacturing PMI tells you how the manufacturing sector is doing. If it's above 50, it's in an expansionary phase. If it's below 50, it's in a contractionary phase. And we all know that if it's in expansionary phase, good news, contractionary, bad news, right? So whole bunch of news today with the Eurozone, with their PMI data, and you can see that the Eurozone as a whole, final manufacturing PMI was 49.7, expected to be staying at 49.7. It dropped slightly, ever so slightly, to a 49.6. So it's in that contractionary phase, It is slowing down a little bit there at 49.6. Not great news for the euro. Small impact there on the euro dollar, with the PMI, with the manufacturing PMI being at 49.6. But what you would have noticed is we didn't see a big drop in the euro dollar. I'll tell you more about that shortly. You can see that manufacturing PMI for the UK was 46, expected to stay at 46, but it actually climbed a little bit to a 47.3. Still in that contractionary phase, but improving slightly. Okay, so those were the news for today. The main things: we had the Swiss franc with their CPI, or inflation data, month on month. It was a 0, expected to be a 0.2, came out at a 0.3%. So small increase in inflation there for the Swiss franc. I don't think that is going to impact the decision of the Swiss National Bank too greatly at this point. Okay, so what I'll do is I'll be looking at the Swiss franc later. I'll be looking at the euro dollar, the pound dollar, and later tonight, in terms of Singapore time, GMT +8, we do have the US ISM manufacturing PMI, right? PMI number for the US was a 52.8, expected to be a 52.1. I'm looking that if it comes out at a 52, below 52, we might see some dollar weakness. If we see this tick lower than a 52, I don't think it will. Based on the way it's moving, I don't think it will. But if it goes below 50, then you'll be in the contractionary phase, and we're going to see quite significant dollar weakness on release of that news. Okay, so we have that one main thing to look out for tonight or today. Moving on from that, tomorrow is going to be a big event, right? Tomorrow is going to be a big event because what we actually have is the US average hourly earnings, US non-farm payroll or non-farm employment change data being released, and the US unemployment rate being released as well. It's US non-farm payroll, first Friday of the month, big event, usually has a big impact. I'll help you plan that trade out as well, right? Some possible trade ideas on that. Make sure you do your own due diligence before you jump into any trades again. All right, so in this case, what we're looking at on Friday, tomorrow, is non-farm payrolls for the US looking to go from a 528K, small increase there at 295, right? A small increase at 295. If we do see anything from a 295 onwards, we're going to see that dollar strength come back quite strongly. Okay, average hourly earnings dropping slightly from a 0.5 to a 0.4%. So not a big change expected there, especially as unemployment rate is likely to stay at that 3.5%. Okay, so I think the focus for tomorrow with the non-farm employment change data will be just that number there. Is it going to be over 295 or not? Help me out, right? Put it into the chat. What do you think? Is it going to be over 295 or is it going to be under 295? I want to see your views. Put it into the chat. Let me know. Over or under? Then I'll tell you where, after I see all your answers, I'll tell you where or what I think is going to happen. What time GMT will this be released? Let me just swing this over to GMT in London. Since you're in Manchester, we'll put it into London. It's going to be released tomorrow at 1:30 p.m. All right, 1:30 p.m. Okay, so I have 2 over, 1 under. All right, so we have, that's actually a very good indication there. It is right. What I want to tell you about trading the news, especially the non-farm payroll, is a lot of times retail traders tend to try and predict this number, right? Try to predict this number. I'll tell you, over my years of trading, predicting this number is almost impossible. Almost impossible, right? Why so? Is because, look, just last month, I see a smiley face there. Just last month in August, it was a 398, or rather it was a 372. It got revised to a 398. They were expecting a 250, right? Expecting a 250, and it came out at 528. So a big increase on the US non-farm employment change data. No one would have predicted that. In July was 384, expected 260, came out strong again. Even at this in May, 428, expected 390, came out at 428 again, right? So expect big surprises there, especially if after that big number, with the forecast at 295. In my view, I think that it is a little bit low, right? Possibly a little bit low. I do think it's going to be over. I think it's an easy number, well, easy with inverted commas, right? Easy number to beat. So we might see a 300 plus, a 3 something number there, and that could lead to further US dollar strength. All right. With that said as well, one more key point I want you to pay attention to. For those of you who trade the Aussie dollar, next week, first Tuesday of the month, we do have the Aussie cash rate, the RBA cash rate, which is the RBA interest rate decision. They're looking at currently at a 1.85%. There has been talk about a possible increase, so I want to pay attention to that on Tuesday with the Aussie interest rate decision. Okay, so quite a lot of news happening. From Friday onwards, we do have a whole bunch of news. GDP numbers, Canadian interest rates decision to be announced as well on Wednesday. Look at it from a 2.5 expected to go to a 3.25, a 75 basis point increase expected from the Bank of Canada. Again, big news there. Following on from that, we do have also the euro with their interest rate decision. Is the ECB going to do a 50 basis point increase, or are they going to make it 75 basis points? Big news again on Thursday evening, my time, or Thursday afternoon in London, and then Canadian employment numbers on Friday next week. All right, so a lot of news to be had for next week, and especially on tomorrow as well. Okay, so with all that expectations, the trades I'll be looking at, or the setups I'll be looking at, will be relatively short to medium term, because I'll be looking for setups that I could, well, firstly plan for the non-farm payrolls tomorrow, and then also trades that I would want to get in, get out quickly before big news events could spike me out of a position. Okay, so this is how I pretty much plan my week, plan my day and my week ahead as I look into the news and then into the charts, depending on how the price action looks like. So as promised, the first one we look at here, the US Swiss franc, right? So let me just clear out some of these charts. And I always start on the H4 time frame. We move that away. I always start on the H4 time frame. So you see here that the US Swiss franc has been climbing towards the upside. It actually went and touched that 0.98 level before retracing back down, and then now climbing back up to test that level again. Given that inflation or CPI data month on month came out at 0.3%, we said there was no big impact there. So looking at it on H1 time frame, this was at sorry, I'm going to switch it back to my time again, just so that I can tally it to the charts. No worries, Stefan. All good, all good. All right, so at 2:30 p.m. With the Swiss franc and their decision and their data, so that's at 2 p.m. there, right? We did see this drop, But this drop was not so much because of the Swiss inflation data, but more because of the dollar index. Okay, so we saw it hit this level and turn towards the downside, but it actually bounced. It came very close and bounced off that 0.9746 or 0.9750 level to turn back up. At this point now, looking at the US Swiss franc, back to the H4 time frame, I would be identifying, take that line away to clear it up. I'll be identifying the next possible high point, right? Why I think it's going to go up, dollar strength. Dollar strength could push it up, and also expecting no big news from the Swiss National Bank pushing it up. And also you'd see that there has been that upward move on the US Swiss franc. Okay, so if you did it more accurately, it could be something like that. So I'll be looking for that next point there, which would be at about that 0.9887, or we can say that it's almost that 0.99 level. Quite straightforward trade here in terms of H4 trade is I would be looking for price to climb up, to break above that 0.98 level, close above that level before I'll be looking for a buying opportunity. All right. I wouldn't be so keen if price actually did this, reverse and turn back down. I wouldn't be so keen to sell it down because I'm more of a trend following trader. So if it turns down, I'll sit it out, wait for it to turn back in. I'll look for that reversal. I'll buy it up again. But right now, as it's turning up, I'll be looking for it to push above this point to trade it up towards that 0.99 level. Good resistance level now. If it does break above, then I'll be looking for example in this case, buying at about 0.9823 or 25. Take profit at about 60 pips, right? Take profit at about, let me just make this a little bit bigger so it's easier to see. Where is it? Okay, take profit at about 60 pips. Stop loss, I'll keep it tight, right? Just because it's reacting off that, breaking through that resistance level, I'll keep my stop loss tight at about 30 pips, right? So you're looking at a 1:2 risk reward ratio towards the upside, towards that 0.99 level. Okay, so all I would be doing at this point for the US Swiss franc, wait for it to climb up, wait for it to close above that point. For me, I trade based on the candle close. Then I'll be looking for that buying opportunity towards the upside. All right. If you have any questions, please feel free to put it in. Let me know. So that's the US Swiss franc. I'm on H4 time frame towards the upside expected if we see further dollar strength. Looking at dollar strength, let's jump to the dollar index, the DXY, to start as a second one. You can see here that the dollar found a big resistance there at 109.45, and it's been trading in a very relatively wide range of about 108.17. Right? So you can see that if I just drag this right across, you can see that price, when it broke above that 108.17, it stayed above that level, right? It spiked down a little bit, came back up very quickly, stayed above that level in that area, and it also failed to break higher from 109.45. Okay, so in this case, if we're going to look for what could happen to the US dollar, especially with tomorrow's non-farm payroll, if it comes out strong, we could anticipate that the Federal Reserve is going to look at it and say, hey, employment data in the US is strong, right? Employment in the US is strong. That gives them more confidence to approach rates decision a little bit more aggressively. So that means that we could see more comments from FOMC, from the Federal Reserve, about increasing rates at a 75 basis point. There has even been talk about possibly 100 basis points as well. All right. So if we see that strong number, we could see the dollar index push above that 109.45 level. How high can it go? I've got my fib level here. Oops, where are my lines? Just change that up. Put in a few levels there. All right, so there we go. I think that if it does break above that point, or even if it does break above that point, I'm looking for that key level, right? 110.72, that's extension of the 127 level. So 110.72, if price breaks above this 109.45 level, okay? Is it likely to move straight up? I don't think so, right? I don't think it's going to do that. I think if it breaks above this point, it's going to zigzag, possibly test again before pushing back up towards that key level. You can see that if I scroll back, the last time it got to this or come close to this very high point, we saw a big zigzag before it pushed up again. I'm anticipating that same move, a break up, a zigzag down, and then push back up again. Okay, so still looking for that dollar strength, especially if price can clear above that 109.45 level. So with that, we look at the euro dollar. All right, I'll take all of that away for now. All right, we look at the euro dollar, and hey, it's been very interesting that the euro has stayed above that parity level. Right, it stayed above that parity level now for over the last couple of days. There, okay. It tried to break down, went back up again, tested several times before bouncing back up. Right now, looking like it's testing lower again because of that dollar strength. Right, because of that dollar strength, the dollar index pushing up. That's why we see this coming down again. At this point, right, before this week, I was actually quite dovish on the euro dollar, expecting it to drop significantly, especially with that channel, right, before this week, with that channel towards the downside there. I was thinking that the euro dollar could get down to that that 0.98 level, right? But this week, we actually saw the ECB members come out and comment. Right, ECB members, European Central Bank members come out and comment that 50 basis point is necessary, a 50 basis point increase for interest rate is necessary. There was even one member who said that 75 basis points is going to be tabled during the meeting as well. All that hawkish talk, right? All that hawkish talk has firstly pushed the euro dollar up from that 0.99 level, that point there, right? Push it off the 0.99 level and kept it above that parity level. So if we do see now stronger US dollar, what could happen is that I'm anticipating either the euro dollar to test lower again before bouncing back up, similar to what happened here. Or if we see very strong US dollar, we could see this bounce lower before turning back up again, right? I still think that we're going to see it turn back up because we've seen it reject this 0.99 level several times already. So it looks like it's struggling to break. And with that talk about further interest rates increase, we could see this push towards the upside. How high can it go? I'll show you here that I think we could see it push towards, well, first one is that 1.008 level, 1.009 level. But ultimately, I think the maximum top side, in my view, on the euro dollar, we could see it get to that 1.02 level, right? That 1.02 level. And you can see if I zoomed it out, just drawing that line right across, you can see that price has actually tested in this whole range for quite a long time before it broke and then turned back down again. Okay, so I think that if we do see the euro dollar push towards upside, possible target level will be that 1.02 resistance level. Okay, at this point, so based on the way I trade, at this point, I wouldn't be looking at buying the euro dollar yet because it is turning down. It is turning down. I'll wait for it to turn down, push up before I look for a buying opportunity, or turn down, push up before I look for a buying opportunity. Many trade setups here that could be had. You could be looking for it to push up, and because that target level is quite high, especially during the news on Thursday next week, we could be looking at a trade like that above 1.005, or you could, yeah, about there. 140 pips take profit, 70 pips stop loss, 1:2 risk-reward ratio towards upside there. Or if we see price shoot down towards 0.99, even better still, you could be looking at about 0.9930, about a 50 pip stop loss. And in this case, first take profit about 150, next take profit about 250 or 260 towards the upside. Very good risk-reward ratios for the euro dollar if we do see the ECB come out with an aggressive rate increase on Thursday, especially on Thursday, right? In this, leading up to that, I think it could trade within this range for an extended period of time leading up to those news events. What instrument is used to draw the channel? Okay, so you can use this one here. It's called the parallel channel, right? You can do a parallel channel to draw this channel towards the downside or towards upside. You just want to join, make sure you join up one or join up two, at least 2 points before drawing a upward channel or a downward channel. Okay, hope I answered your question there, Brian, Elfine. Okay, so that's my view on the euro dollar. Next one I want to look at is the, where is it? The pound dollar. Okay, pound dollar has been very, very interesting, right? We've seen that big drop. Every time I think that it's possibly going to stop, it drops further. Every time I think it's going to stop, it hits my take profit at a support level, it drops further again. So zooming out on the pound dollar, bring it to the daily time frame, you can see that it is approaching that very low point. This was back in March 2020, where pound dollar dropped to that 1.1420 level. Currently is at 1.1561. Okay, so you can see that big downward move there back in 2020. In this case, it's actually a lot easier to anticipate this move. Again, that channel towards the downside, right? So for Brian, you can see that I've got 1 point here. I'm lining up a couple more points, and then I drag it down. And that's why, so if I just move this a little bit lower, and that's why I anticipate that price is going to come down towards that 1.1420 level. Okay, put this down a little bit more. Okay, there you go. So this is on the daily time frame. I can see that it's tested in that area, tested that area to turn down. I'm looking for it to come down towards 1.1420. Back to the H4 time frame, right? You can also see that within that channel, you can actually find another steeper level towards the downside. And that's why we actually see the pound dollar hit and turn down, hit and turn down, bounce off this level, hit and turn down. Now it looks like it's trading down towards that point. Okay, so in terms of a trade idea, what to look out for here? Okay, I would be looking for it to break below, because this is such a low level, right? Not seen since 2020, 2 years ago. I'll be looking for it to break below round numbers, right? So it's at 1.1566 now. I'll be looking for 1.1550. Right, so 1.15, about 1.1550 there. That's 4.6. Let me put in 1.1550. Okay, so I'll be looking for price to break below that point before I look to sell it down again. And then in this case, I'll be looking for a short position towards the downside, very tight stop loss, about 50, I would say about 50 pips. Take profit in this case, about 100 pips, a 1:2 risk reward ratio towards the downside there on the pound dollar. Okay, based on the round numbers, we look for it to break and then down towards that channel and also that key support level there. Very straightforward on the pound dollar, but be extra careful that as it trades lower, as it goes into a historic low level, we're going to see higher volatility. What I mean by higher volatility is you can see that once it comes lower, it bounces strongly, looks like it's going to reverse, doesn't reverse, turns back down, bounces strongly before turning back down again. I'm looking for it to come to this point, possibly bounce a little bit. We saw a small bounce there, possibly bounce a little bit before turning down, and then I'll be looking for that 1.1420. What happens if price gets to 1.1420, right? What happens if price gets to 1.1420? I would tell you that I would not be looking at the pound dollar after that point, right? If price goes and breaks below 1.1420, it could get to 1.12, but I think in this area here, we're going to see significant volatility. We're going to see price spike up, bounce back down. There are a lot of traders who trade counter trend, so they might have buying orders in this region here. So just be extra careful. We're going to see high volatility from that point there. Okay, so watch out for that. Once it gets to that level, gets to a historic low, switch it out, look at some other pairs rather than the pound dollar. We've got a lot of other pairs, a lot of other potential trade ideas to enter instead. Okay. Any other questions so far? While I grab a quick drink. Everything good? You guys catching the levels, catching the analysis okay? Let me know whether I'm too fast. I should slow down. This would be a trade. It's quite interesting there. Okay. So with that said, next one I'll look at is the Bollinger Bands and the fib levels. You want to elaborate a little bit on that? Like what do you find? I love the Bollinger Bands actually. You know, so what do you find that's troubling you with the Bollinger Bands? Okay, so while you type that up, I'll jump onto the US yen. US yen at this point, I can tell you that I had a very small trade here just because I saw it climb up. Right, I saw it climb up and hit that 139.67 level, and I saw that a couple of rejections there. I actually did sell. I did a quick counter trend trade towards the downside, towards that point there. Right, because I found this this as a resistance level, right, and then I traded that towards that support level. So I didn't get all the way to the line. I got just before the line because my take profit is always before that support level. I got in about 139.45, so about there. Right, so I saw that rejection. I saw it turn back down. I got in about that point to trade down towards that 139 round number support level. Okay, at this point right now, so that trade is done already. So at this point right now, you can see that it's hit 139, it's bouncing back up because of that dollar strength. as it pushes up. It's too late to enter now. I'll tell you, it's too late to enter now, because even if you did enter at this point, you'd be trying for a 30 pip take profit. You'd be risking about 30 pips. You're looking at a 1:1 risk reward ratio towards upside. Could happen, but it's possibly not worth that kind of risk. Okay, what I would do is look at the pound dollar, look at the other pairs first, and then if the yen climbs up and reaches that 139.67, and if it breaks above that point, then I'll be looking for a buying opportunity towards the upside. Okay, how high can it go? How far can it go? I would say that I have my level there. All right, my level there at about target level would be at about 140.11, right? 140.11, and that's why take profit will be about a 30 pips. As it breaks above that level, I can keep my stop loss very tight, maybe 15 to 20 pips, or 1:2 risk reward ratio towards the upside. Okay, so following up on the Bollinger Band question, I do not understand them at all in terms of indication and checking them to be sure before I trade. I use trend lines heavily. Trend lines are good, and then add the Bollinger Band, and it seems to throw me as I do not understand what they are indicating. No, so a good couple of things there is that a simple solution might be that if Bollinger Bands throw you off and you are very comfortable with using trend lines, then you could just take away the Bollinger Bands, not use it, right? That is one way of approaching it, because if it doesn't add value to you, you could remove it. The other one, what I'll do is I'll show you how I use Bollinger Bands. Okay, so while I'll show you how to use Bollinger Bands in my view, then I'll answer the next question on gold as well. So what I'll do is I'll apply Bollinger Bands to this. Okay, this is on the H1 time frame. Let me get to the H4 first. All right, and I'll do one more. And just bear with me for a moment as I fix up some stuff. Okay, there we go. Okay, so this is how I use Bollinger Bands. These are the slightly different way that I look at it. I see a question there, Tiseto. I'll get to that shortly. Terrence can't see my charts. Can you guys see my charts okay? Terrence, let me know if I... Okay, so everyone else can see that. Terrence, I'm not sure what technical issues you might be facing. Just maybe try and log off and come back in again. We'll wait. We'll give it, we'll catch you up on whatever you might miss. Okay, rotate the screen a little bit or something. Okay, so looking at the Bollinger Bands here, right? You can see that what I've done, I've added in the 1 standard deviation. So the way I tweak it a little bit, I add in my 1 standard deviation. So I use 2 Bollinger Bands at a time. I got a 2 standard deviation, which are the lines on the outer ends, and then 1 standard deviation are the lines on the inner ends. Quite straightforward. Sometimes what I do is that when you see price trading between the 1 and the 2 standard deviation, right? That's where I would call it a bit of a trending scenario, using Bollinger Bands as a trending scenario. So you can see that if it comes in, I'll look for it to trade within this range. If it breaks above that medium level, then I'll invalidate the trade, right? So while it's still within that level, I'll still hold on to the trade to bring it towards the downside, right? In this case, once it comes up and breaks out, right? If you had a trade, then I'll close it off, because I don't know what's going to happen once it goes above that moving average. It could go up, it could bounce around, it could do a lot of other things. So there's one straightforward way. In this case, on the gold trading lower, looks like it's going lower. We'll put a few things together here. We do have pin bars at this 1700 level. So pin bars at this 1700 levels could indicate further rejection. Trading between the 1 and 2 standard deviation levels could indicate further trending scenarios towards the downside. Okay, so those are the ways that I look at it. One more very important way I look at it is that 2 standard deviation level, right? I'll change that color of that just so that it's let me see, how do I do it? What should I do? Make it thicker. All right, there you go. Okay, so I pay a lot of attention to the 2 Bollinger Bands on the outer ends, the 2 standard deviation, because what I find, based on my back test, based on my experience, is that quite often, whenever price breaks out of that level, we're going to either see it consolidate, or we're going to see it consolidate and bounce back in. Welcome back again, Terrence. Good that you got the charts. Fantastic. All right. So when I always have my 2 standard deviation there, when I see price break out, right? This is on. When I see break out, we'll almost certainly see it bounce back in again, or sit in that consolidation, consolidate before bouncing back in, or consolidate before turning back down again. You can see here on the H4, it tried to break out before coming back in again. In this case, every time it tries to break out, we see it come back into the range, break out, come back in, and again before it resumes into that trending scenario. Okay, so Stefan, I hope that helps you with the Bollinger Bands. It's actually not that, shouldn't keep it too complicated. You know, I use it to tell me when it's too late to enter a trade. All right, when it's too late to enter a trade, because for example here, what you would see is that a lot of times traders would see it drop, and then that big drop, what happens? You enter, you think that it's time to sell, right? Without the Bollinger Bands, you would have thought it's time to sell. The next moment, it shoots back up again. All right. So when it's outside of, when the price is outside of the band, it tells me it's too late to get into a trade. Let it come back in and see what happens again. It could also tell you that it's a good time to close out the trade, because imagine if you sold it here, went straight down, I'll close out the trade because I'm not sure whether it's going to come back in or consolidate. So I'll close out the trade because it's outside of the Bollinger Band. Okay, so that's the way I use it. If it's outside of the band, and also if it's in between the 1 and 2 standard deviations, but more so if it's outside of the band. I use that to tell me when it's too late to get into a trade. So with that question there, okay, so take the advice to get rid of it. It's always look like a better indicator. No worries. All right. So with that, the question on gold. So let me just clear out this chart just so it's a bit easier to see for you guys. All right, gold currently at that 1700 level, 1701 level. Where could it go? The next key support level is at 1680, right? It's at 1680 or 1681. And if I went to the daily time frame, right, made it a bit nicer there, you can see that if I dragged it right across, right, that 1680 level is a key support level on gold. We've seen it hit back in August 2021 and bounced strongly back up towards that 1830 level once, right? We saw it do that in July. It hit or came very close to that 1680 level and bounced straight up towards that 1800 level again. And now it's coming back down again. All right. So if you're looking at a short-term trade, right? A shorter term trade, I would say that I anticipate gold is going to trade lower, possibly trade lower towards that 1680 support level that is done for the last 2 times already. I think it's going to continue lower. Also with that downward channel towards the downside, we can see that that's a possible target level towards the downside. Okay, so we can see that move lower, but I'll also highlight this to you. You can see that the last time it got to about that 1700 level, a lot of volatility, right? A lot of volatility. I think that I expect it to drop further, but I think that we might see further volatility, especially with tomorrow's non-farm payroll coming up. If in the off chance that we see a weaker US dollar, we could actually see this bounce back up, right? Back up before possibly turning back down again. So a lot of volatility as we saw here. We could see that same thing happen. If not, then we'll be looking for it to break below 1700 for that selling opportunity towards the downside, about say 1696, stop loss at about 1705, take profit definitely above that 1680 level towards the downside. Once it gets there, get out. If it breaks lower, then we'll reevaluate again. If not, it's likely to hit and bounce towards the upside. All right. Let me see who asked that question there. I hope that helps you there, Pendulini. Sorry, I got your name wrong, but yeah, I hope I answer your question there on gold. Which indicators are most recommended and easy to be used by a new trader? I would say, one thing that a lot of new traders approach with indicators, right? Indicators you should never use an indicator alone, right? Never use one indicator to expect to tell you the whole story. Use it as a suite of indicators. So you use a couple and make sure they're different ones. Don't use all oscillators or all the same kind of indicators. Use different ones to tell you the story. And also that indicators are not, understand that it's not always going to be 100%. It is slightly lagging as well most of the time. So you don't want to use it to tell you exactly when to buy or when to sell, right? It tells you that, hey, there is a buying opportunity, look into it. If it breaks a level or it breaks a couple of levels, then you could be looking to sell. I'll give you an example here based on gold that we're just looking at, right? Let's look at the MACD, for example, right? So gold at this point with the MACD here, we actually see it pointing down is actually back here when it was telling us to sell, right? And MACD is a little bit lagging, so it's already turned down. So I've actually got my channels telling me to sell. I've got the dollar strengthening telling me to sell gold. I've seen it turn down. I see MACD as a confirmation, right? As another confirmation that I could be selling it towards the downside. If it converges, I wouldn't be looking to buy. I'll look for it to turn back up before selling it back down again. For example, in this case, right, MACD crossover to show you a potential move towards upside. You could trade this and make money towards upside, but for me, I would follow the trend. I'll base it heavily on trends. So with that downward move, I'll be looking for it to move up. I'll be hands off. I wouldn't enter a trade until it hits that level. I'll be looking for a continuation towards the downside. If I entered there or if I entered later, then I would see the MACD crossover add to that confirmation. Okay, so there is no best indicator or most recommended. I would say a lot of times look at the trend, even if you had no indicators, right? Look at the trend, look at the support resistance. Just those two levels alone, or just those two things alone, it's going to help you massively with your trades, because follow the trend, use the channel, and then if it stays within the channel, look for it to trade between the channels with your horizontal support or resistance levels. Look for it to break those points. All right, I hope I got you there. Tiseto. All right, and then lucky last, let's do the Aussie dollar. One of my favorite pairs. Okay, well, I did this previous analysis. I was looking for it to turn down from that 0.6845 level towards the downside. It's happening now. So I'm looking for this to trade lower towards that 0.67 level, right? And again, as we spoke about, if you just looked at that, you can see that this is all pushing towards the downside. Even if you looked at it on H1 time frame, you can see that the MACD crossover is just about to form to push price lower. Okay, so it looks like we're going to see dollar continue to strengthen. Right, we're going to see dollar continue to strengthen, but it is reaching that point again, a bit of a decision point here of about 109 level, about at 109.15 level. If it breaks above, we could see 109.45. And if it breaks above that, we're going to see big upside with a lot of volatility. And that's why we see the Aussie dollar, we see all the Aussie and the Euro all pushing lower at this point right now. So should we follow trend, the support, resistance, and resistance to have great results? Yeah, but could you at least give a name of an indicator to combine with the okay, I would say, you know, you could use the MACD, right? I'll give you a couple. Don't use it all at the same time because it's gonna mess you up a little bit. Too many indicators. So use the MACD. Look for that crossover towards the downside or crossover towards the upside. Actually, I just did MACD session yesterday for IronFX as well, so you can check that out. And the other one that I like, especially if you're on a H1 or H4 time frame, will be the stochastics. Okay, so looking at stochastic, things that I'll be looking for is when price turns out of that 15, I got it 14, 16, and also the 75 level, right? No, actually, sorry, 85 level. Okay, so I'll be looking for that to turn down. Once I'm not looking for, I wouldn't be so keen on it if it trades at that point. Or moving up, I'm looking for it to turn down from that point. I'm looking for it to turn up from that point because you can see that anywhere in between here, nothing much happens. But once we see it turn down from that level, from that 85 level, we're going to see price move massively towards the downside. Or when we see price turn up from that oversold area, we're going to see price move strongly towards the upside. In this case, trend still pointing down, so I'll be looking for that selling opportunity to turn down again. All right, so two, I would say MACD or the stochastics that you can use as an indicator to help you with the levels and the ideas that you have. Which settings do you have? I keep it on a standard, but I'll move the overbought to 85 and oversold to 15. So I'll keep those, I'll move the levels a little bit to 85 and 15. All right. Do I have a YouTube channel? I do. You can just search for me and you'll find it. All right. You're most welcome there, Vidal. Okay, so a lot of news happening. Just make sure that if you're trading the news, for me, I tend to prefer to close out a trade before the news, right? Especially if it's in the money. You never know that we could get big surprises with the news, so it could spike the other way and close you out at a loss. So I would like to close out the trades before the news so that I'm square off. Heading into the news, I can take more opportunities from that point. All right. So if you had a good session, I hope you had a good session. Let me know. And I'll call an end to the session. I hope you trade well, trade safe. We had actually covered quite a lot here in terms of indicators, in terms of levels. How does the news move the price? Oh, we just spoke about it, PMI and the non-farm payrolls as well. We could see, with the good news, we're going to see that price strengthen. If it's not, especially if it reacts to a key level as well. Okay, so I hope you trade well, trade safe. If you want to find out more, make sure you tune in to the next sessions and all subsequent sessions as well. And take care now. Bye-bye. Thanks, Stefan.